When we talk about data, we always, have insights on data, uh, streams of data coming from different sources. There's enough data. It's like, water everywhere, but nothing to drink. Uh, it's not about the quantity of data, but how we manage the data, how we source the data, and of course how it really enhances the risk management techniques, and of course the profitability of the organization. So, I mean, let's get started on the discussion. Although today, big data and data analytics is the key word, the buzzword. The data is the gold mine. But how are we really managing the data, and how we actually, putting into use? Uh, and The data uh, in the bank today is as critical as any other resource that we have. It could be human resource, it could be the information technology, that revolution that we have seen, especially in terms of the processing, in terms of how we manage customer. So I just want to take this opportunity and ask Mr. Patra ji. He manages a large portfolio in SBM. How has this data, given insight on the customer behavior, and on in terms of how it can be really utilized?
Yeah, thank you. I will just take a few minutes to give a context that how this thing has transformed uh, banking in particular, but the entire ecosystem in general. If I take back, I think around 60 years back, Indira Gandhi went for nationalization of banks. The one of the key objective of that nationalization process was to take banks to the unbanked areas, have a greater penetration, and bring the mass to the banking sector. The model at that time, what it was in the play, was to have branches in the nooks and corners of the country and to reach out to the public at large and to the unbanked areas. It took very long years to get the objective fulfilled because of the challenges faced in getting the banks to getting the unbanked uh, portion of the population to the banking, and make banking products a profitable proposition for the banks to survive in the long run. So that was a very tedious process. Just to give you some kind of understanding of the challenges, at that point in time, there was nothing called a defined identity or identity document for the customers. The people, when they came to the banks, they were identified through the social circles. One of the customers of the bank used to introduce another customer his address. And in most of the branches, you will find the branch staff and the manager would know almost every customer of the bank because of the face-to-face interaction. And it was so much difficult to design products to understand the need of the local flavor to design a product. So whatever was the product which was designed, it was being sold in all the branches across with no customization to suit the need of the customers. Thereafter, I think once the country got into the path of computerization, digitization, and formalization, what we know in last couple of years, maybe decade and a half, is that magic called JAM, where the Jandan accounts were opened across all the banks. The introduction of Aadhaar as an unified identity document for the customers, and the general adaptability of mobile all across our lifestyle. This has transformed the banking industry into a different paradigm. Earlier, the customers of the banks used to be the customers of that particular branch, not even that bank. Today, if we look at a customer is a customer to the banking industry or in the BFSI segment. If somebody has an account with one bank, probably the opportunities available to him is limitless in transacting his business all across. So this is how the journey of data has come in to propagate banking into a very large sector, unbanked sector, which was a objective long before, and it got fructified only because of data and the intervention of technology. The second thing is that the bankers were very shy of lending to a customer because they were not sure of what will be the outcome of that credit. So with the introduction of your bureaus like CIBIL, where every customer's credit behavior is documented, digitized, analyzed, it becomes very useful for a banker to assess the credit worthiness of a customer and to assign a probability of default to price his product accordingly. So I'm just keeping it simple just to put in context that how much data and its analytics has helped the bank coming in last 60 years. I think we could only catch up with that objective only in last year, 10 years, 1.5 decades, if I can say so. In the interest of time, I would like to stop and take the discussions further. So if I get a chance, then we will come deliberate on these things going forward.
Thank you, Mr. Patraji. I think you made a very important note on how digital revolution has changed the lending landscape. For the bank as well as for the customers also, where customer actually gets his proper due, and any customer who's eligible can get his loan as quick as possible. You were talking about financial inclusion, so I just want to ask Pradeep, who handles the risk for Airtel Payment Bank. Has this digital initiative and the trend in the technology actually helped really increase the span of rural India, the bankability in rural India?
Thank you very much, and thank you, sir. I think the story of 60 years well wrapped into few minutes. But story does not end there, right? So what we have seen in last couple of years, together with this jam trinity that we popularly call it, the COVID has happened. And what COVID did is it actually accelerated both inside and outside. So while there was a technological adoptions at a consumer level, organizations also accelerated, which means that digital adoption is at a pace we have seen, which we have not seen in past. We can see it in terms of the type, the tera data that we generate, or the size of data that used to be generated in 60 years possibly gets generated in few days or few hours, if I may say so. So what it has done is it has put technology, especially the financial technology, in the hands of somebody who is the first time not just user of the financial technology, but the technology itself. So a lot of new users. While the adoption of technology was at such a pace, the readiness for that technology for fit for purpose for an individual, let's say sitting in tier 6, tier 7 village, possibly wasn't there. So the onus of the product developers or the onus of the banks or the regulated entities who are offering these sophisticated products was even far higher. So how do you do that in a situation where your user, you know, that is not as sophisticated as your urban user, is going to consume the same product, is going to utilize the same set of technology? The only way to do it is put the customer in the center of it. So assess your product for the vulnerabilities not in the product, but also the customers that you're serving. Now look at the way the banks traditionally used to operate. They used to operate brick and mortars, like sir has highlighted. They also used to operate through the branches and through the head offices. The processes were long drawn, right? It has all changed now. Majority of the transactions that take place through the network of participants. It may not necessarily be the banking participant. You rely heavily on third parties. It's the area of co-creation rather than I'm creating everything myself, which has actually further accelerated the pace at which the financial inclusion was driven. So all this thing together, if we now put how the data analytics can add value to it, it's about asking question that all the set of data that I'm using within the organization, are they giving me some intelligent actions to be taken out of the data? Are they improving my customer experience? Are they improving my risk management practice? Are they improving my product innovation? Are they improving the way I deliver communications to my various stakeholders? Is it helping me uh, perform activities for regulatory compliance, which was a challenge for me? So we'll come to possibly each of this section in the follow-up sessions, but I think it has greatly impacted the way we deliver, the way we run our processes, the way we evaluate our efficiency in the products.
So thanks, Pradeep. I think what we're talking about is creating specialization in terms of identifying the need of the customer. It's like when you go to a website and the website actually knows what you want. Similarly, data helps you identify what the customer really wants. You create specific product and specific processes for different customers. See, while we were talking about financial inclusion, maybe I just want to extend it a little further. I would like to ask Kunal. See, today we have enough data to empower, the bank or the financial institution to take a informed decision, while lending or any other customer service initiative. But how does it work for somebody in a rural area? I mean, you've been managing Ashok Leyland risk, and most of your customers come from rural background. They have a very low foot for digital footprints to carry, and as well as the as Pradeep was talking about the literacy, digital literacy. So I think that's where the challenge is. So how have you overcome that in your organization?
Thank you so much. Firstly, I'd like to thank Elets team for having me here, and secondly, the views that I'll give over here are my personal views and not the views of my organization. I would like to say that for us it was a twofold journey, because we are dealing with a customer segment who is low on digital footprint. So what happens is that while you are marketing your product to him, you also have to market the process to him as well.
Right.
You also have to educate him about the risk around his own data. That, for example, if at all the executive are meeting him, today it's on a mobile app, so they don't need to give the copy of their Aadhaar, or they don't need to give a copy of any other personal identity that they have. They can they will click it on a mobile app, and that's it. So it's about educating the customer first of all, that there is these are digital processes which have been enabled. What are the kind of risk which are associated with those digital processes? Second is also to educate the sales force, because when we are operating in almost around 1700 odd locations across India. So and to operate in those many locations with 11 different product lines, there are different challenges in itself. So to educate the sales guys as well, that how and what is the use of data, and what can go wrong if the data is actually handed over in a wrong hands. What can it lead to? So the traditional approach has always been that the entire frauds in the BFSI segments are financial frauds. It's no longer only financial frauds. It's data theft, which is actually becoming up in a big way. So educating the sales guys in and around that. And thirdly, the angle of creating a control infrastructure in the business processes in itself, so that you collect minimum data from the customer, or a minimum or like one identifier, like sir was saying earlier. You collect one identifier, maybe a registered mobile number, and then collect all the other connected data from that, and then penetrate it within the organization to assess him from a credit standpoint.
Right.
And last but not the least, there is the entire infrastructure has to be controlled with those cyber security related controls in place, which will prevent you from the external attacks point of view. because that is something that we in BFSI sector, I'm sure I'm talking from all
Yes,
of our point
yes.
of view, is something that keeps on coming our way. So we also monitor what are the number of attacks that are coming our way, and then do a root cause analysis and try and learn and implement controls which can support us from that perspective.
Right, right. So I understand that this requires a bottoms up approach, and also working on different risk models, right? I mean, I'm sure you need a scorecard, you need a validation of the data that you have, which you have already built over a period of time. Uh, but just one more extension of the question is that how does an organization build something from scratch? I mean, if they're going to operate, maybe it's from tomorrow. And how do you use the technology, and how do you actually use the data analytics to really help in decision making?
Yeah, it's an interesting one, and something that is very close to my heart, because that's what we have built over the last 3 years. Our journey actually went from a top-down approach rather than a bottom-up approach. We firstly started to understand that to assess the customer in rural or tier 2 or tier 3 segment, tier 3 cities, and a customer base where my entire base, out of my entire base, 72% of my customer is new to credit. How do I assess him? So we kind of analyze what are the data points that we need from the customer to assess him, which should be brought down to minimalistic level so that the theft points are reduced. And then we went back and created the application forms in that way that we collect that information from the very beginning. And it wasn't easy, because it's not easy to convince the frontline guys that this is another set of data points that you have to collect. But when you give them a view that with this kind of infrastructure of decisioning, you will be able to take decisions faster, you will also be accurate. And one of the most important point why we are in that segment is that in the urban segment, I feel there is a risk of over leveraging, but in that segment the risk is of under penetration. So
Absolutely right.
that's how we kind of give the frontline sales guys a kind of an assurance that okay, this is how this additional data point will help us in creating a scorecard which will be able to give you a better probability of default. And then slowly and steadily this culture got penetrated into the organization.
Great. So I think the solution for any organization who wants to start data modeling from the day one, we have solution, and I think there is enough of intelligence around that we built. In fact, we have somebody from SAS, who can help us in building that, and I'm sure he's helped us in terms of identifying this core issue. Uh, how do you see that model creation of a model risk as a challenge?
Thank you so much for the question. So, like we have been hearing, there's a story of how BFSI has also moved from a branch based to now a digital. So, data has also moved a very important journey from being a liability to being an asset. Today, we are discussing how data analytics is going to increase our profitability. Some decade before, we were just thinking that how to store that data, how much cost I'm just spending only to store the data. So, data has also come a long way with us. Now, it's a asset for all the organization. So, when it comes to leveraging data analytics for generating profitability, so analytical technique like machine learning, risk modeling, credit scoring, these play a very important role. The perspective change that we need to bring in to control risk is that we should stop celebrating model creation. Generally, we very much appreciate and celebrate model creation. Okay, I've created a risk model, I've created an application scoring model, I've created a customer churn model. So these are the celebration that a data science feel good about. But it is always the productionization of this model which actually generates the profit, which is the topic, right? Profitability. So till the time it is in production, we should first of all stop celebrating that, okay, I've created a model. Model creation is nothing. It's a mathematical thing. You just applied on something and you are getting some result. After operationalization, there are so much risk which is involved. because we are taking some human decision. It's mathematics we are using, but finally the decision is taken on a human, which is why it becomes responsibility of organization to create responsibility around that. For example, RBI and all these regulators are talking about ethical AI, responsible AI. That model can be accurate if I am using, let's say, a variable called gender or a caste of a person. But it's not ethical to reject a loan just basis of where he lives and from which caste he comes. Even though my model is giving me a 10% delta in my accuracy, but I should not use some of these models. So is my model fair? Is my model biased towards some variables? All these becomes very important point. Can I explain the model if the
And
model
how
taking
do
some
you
decision?
achieve that? I mean, how do you said it's the model has to be fair, right? I mean, there's always a balance that you need to create, right? Profitability and risk. So similarly, fairness and effectiveness. So how do you create the balance uh, 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 when you train the model, right? When you train the model, and as well as when you get the specialization of the effect of the model. I mean, how do you do that?
Correct. So um, the accuracy of the model actually very much depends on the kind of use cases, right? For some use cases, even 60% accuracy is good enough, right? Or for some model, 99% is also very less. If I'm detecting cancer or image, 99% accuracy is not also acceptable model. But if I'm doing a cross-sell campaign, maybe 60-70% model is okay, right? So accuracy is not something for which we should actually chase. There are guidelines and regulation which are coming, which is kind of we have to follow those regulation, then only we can move forward, right? So fairness is about that all the variable that you are using, your model should not be too much dependent on one variable. So too much is again a very generic word, but statistically we say 20%, more than 20%. If a variable is impacting your model, above that you should not take any variable. Otherwise, your whole model is only dependent on one variable. If it that changes, your model stops performing. Right. So these principles are coming around ethical AI, ethical ways of creating the model. What kind of variables you can include, what kind of variables you should not include. Model has to be interpretable. Now, this is also big challenge. Models are becoming complex and complex to give you higher accuracy. But are you in a position to explain your result? Because customer can come and ask on what basis have you rejected my loan? You cannot say that there's a AI model. It gave me a score and I just rejected your loan. So it has to be interpretable model also. So all these are risks which is combined to creating these models.
I think that's the challenge I also face telling my business that the AI is actually rejected, but they come back and tell me that why. So have another gray area, and then we'll work on that. So that's the challenge that all of us face. Sonali, yours is a complete go no model, right? Where we were talking about some gray area and some ethical modeling that we do. How did you achieve that? How did you build uh, to reach this scale? We were talking. I think the monthly disbursement is close to about 1,800 crores that you do, and no human intervention in the entire process. So give us some experience of yours, Sonali.
Answering a very relevant question for the kind of background that I come with. See, when we started in 2016, unlike for banks and larger institutions, and nothing against them, for them, technology and analytics was an afterthought. For us, it was never an afterthought. For us, it was the core. So, as much as we were thinking about risk analytics, we were also thinking about customer analytics. So, one of the things that we started with, right, we thought of the customer first. A lot of people here mentioned about
I
they
think
trying
Pradeep
to
spoke
educate
about.
their sales guy,
Yeah.
right? And trying to say that the sales guy needs to adopt the technology first for the customer to adopt it. But for the digital lending platform, the core was customer adoption of technology rather than the sales guy intervening and saying that this is the right technology. So for us, there were 3-4 things which were core when we started building. One, customer simplicity without compromising on risk was something that was fundamental to us. And that is where elements of digitization, elements of Pradhan Mantri Jan Dhan Yojana, elements of e-Aadhaar, KYC, video KYC, RBI being a supporter, etc., became strong drivers of us being able to drive customer adoption. The second thing that became core to us is that when we started thinking about our risk models, right? I agree with him and absolutely agree, because I have also been an analytics professional and my team used to celebrate creating a model, but deploying the model was never a core. So for us, we made model deployment as the core. When we started, we were at 75% straight through processing rates. We made sure that we quickly, gradually evolved to 100% straight through processing rate. Now that happened by putting the right culture within the organization, by telling them that data is a mechanism for you to learn. Data is not a mechanism for you to introspect. So that became the second strong driver, which is around saying that the right culture, right team was put into place, which was thinking data first, technology first, and then thinking processes. The third thing for us, which became very, very important as we were scaling up, for us, the traditional banking was the core. So there were a lot of learnings that we had from banks. I myself come from HDFC Bank. So the techniques that were used on personal loan or personal lending, they were things that were not compromised. For example, it is like a utopian truth, right? That if the credits and debits are happening on the same day, then there is some fraudulent activity in the customer. So we did not overrule the rules that had been set by the industry for the last 20 years, and the risk practitioners that existed, they became the core to us or core for us to start. So that was the third important thing. The fourth important thing is that thanks to AI, ML, and all the techniques that were coming in, our models, unlike the banking models, were not so traditional. So we were not learning, say, NPA was not an input into learning the model, because otherwise it would have taken 90 days for us to understand the customer behavior. We were able to recalibrate our models on very short-term performance. So that in itself became a strong driver for us to learn faster and also scale up. So these were the 4-5 things that were core to us as we were building the business from 0 to 100.
I think the model has to unlearn as much as it learns. I think that's the key, for better decision making. No, we spoke about getting the best to the customer through technology. How we can enhance the experience, how the loans can be granted in a much quicker time. All these aspects has to go through security, right? I mean, because today data is available, data is every customer's data is available with everybody. Sheikh Sahab, how do you manage this convenience as well as the security of the data of any customer? So today I am slightly reluctant to give data to anybody, to a banker. But then I also know that unless I give the data, unless I share my data, I don't get my things done. So what is that you need to really take care when you share data, and how does the bank actually manage the data of the customer?
Yeah, thank you, Rajaram. First of all, I congratulate Elets for organizing such a spectacular resident event in Goa again, and thank you again for bringing all of us here for the next second year consecutively. And whatever the views expressed would be quote unquote personal, not related to the organization I represent, Raja. So, Raja, it's a good question actually. So the data is evolving, and we all spoke just now like data is becoming like the worry for the banks, worry for the financial institutions, and how we handle it, and how the large amounts of data is being created back end, and the couple of models like 100% not accurate, but like the models are helping the banks in mitigating the risk and identifying the the risk around the data workflow. From a pure play security perspective, so when we collect the the customer data, personal identifiable data, and financial identifiable data, it becomes the responsibility of the bank or the responsibility of the institution to safeguard it, and to provide the access only to those people who are authorized for that one, and also dispose of the data in a proper way as per the guidelines actually. And on top of it, the data analytic platforms, what we are discussing right now in this forum, is helping the risk managers like all of us here from a security perspective also, in rightly identifying the vulnerabilities, foreseeing the vulnerabilities to come into the future actually. So with the threat modeling and the the anomaly patterns actually, we can predict enough before time. So what can be the risk beforehand actually, so that like we are prepared enough to handle them and timely mitigate them actually. And other than that one, risk modelings actually based on the data patterns is helping like to learn and unlearn from the existing and the peer risk happening in the different parts of the world, and to prepare ourselves face those vulnerabilities in future. Thank you, Rajan.
Thank you, Shaik. Yes, Sonali,
Yes,
you
right.
can
Yeah,
please.
I think one of the other things that fintechs are grappling with, right? That one of the data points which we take from the customer is the data points basis is SMSs. Though we end up reading the commercial messages only, but that becomes a big concern from a consumer standpoint. So that's where I think a combination of regulator, which is RBI, and Google are putting a lot of practices in place to ensure that fintechs and banks are following the right norms from a data capture standpoint, because the mobile data in itself is also becoming a big threat from a user safety security perspective.
Absolutely. I completely agree, Sonali.
A lot of awareness around the sensitivity around the user data, especially
Right.
as Sonali mentioned about the personal data, about the data subjects, all of us actually as the users of the banks actually fintechs industry.
True.
Yeah, so
Absolutely. I mean that leads to fraud and of course loss of monetary value also. Rishi, we all spoke about businesses where it's more of automated and completely digitized. Uh, you run the risk for an organization which lends to affordable housing, where you still follow conventional way of going and reaching out to customer, talking to them, underwriting the risk, uh, as well as avoiding the frauds. How has this data analytics actually helped you in taking informed decision? Because obviously, like I was talking to Kunal, those customers are do not have those are called thin files, very limited data that you have. Still, you follow conventional way of underwriting, and how has it helped the? See, today you have bureaus, you have uh, solutions to detect fraud. But how has the analytics helped in forming a judgment on a customer?
Yeah, thank you, Rajaram. If we start with the underwriting is a process. We understand that we are doing on the basis of certain customer information, his financial information, and all. So ages we are doing underwriting, and we are working on a model. It's model which is unwritten model. We follow. Even RBI follows the Camel's model. If you see, so there was an unwritten model where people take the judgment on the basis of certain piece of data which may not be organized and codified data. But currently, if we look at with the big data, with the social media data, with the some external data, bureau coming into the picture, as well as lot of internal data capturing, this data analytics is going to play or is playing a big role on onboarding of the customer. So it will be in the form of maybe a scoring model, early warning signal model, maybe PDM model, pre-delinquency, where we are using for the collection. So data analytics is not having any limit, whether it is affordable segment or NBFC or banking. But one part I want to highlight here is that yes, we are using data analytics like anything uh, for onboarding, EWI and all. But still, if we talk about the AI, machine learning and all, that is a somewhat black box for us. That is black box for everyone. We don't know what is going in, what is coming out. To understand that, yes, those who are developing the model is not only the tech guys, there must be an involvement of the financial segment guy, those who understand business very well, those who can explain really why this is yes, why this is no. Then only we can say that we are really using the big data or data analytics in a better way for onboarding the customer, for collection, or for early delinquencies prediction. One part what I can say is that yes, fraud is very well controlled through data analytics. It has gone leaps and frogs because uh, if we see earlier, catching the fraud is very difficult. Nowadays, with the data analytics, with the big data, with a lot of plethora of data availability, we can catch a fraudster very early. And it is going to be the way the modeling is done around the fraud risk management. The data analytics is the going to be the next, we can say, the part of the success story for the fraud management as well as the underwriting process.
I'll just add one point, because the problem statement is similar between me and Rishi. See, any model requires a good input of data, and good input of data will come when the customer has that level of digital footprint, or that level of data with himself. So an NBFC segment, my belief is that an NBFC segment is basically an incubator for a customer to become a later down the line a customer for the banks. Because the customer which is coming to us, we kind of build their model history or their data history, or create that data for for them,
scores.
for the credit scores, and how they will behave. So still our way of underwriting will be a mix of traditional come digital. We will have models like if we have repeat customers, so we will have propensity models of what kind of customers will be repeating, and we will try and cross sell to those kind of customers. But there will be a combination of that, and once we incubate those customers, there will be a penetration, or there will be those customers that will leave us after 2 years or 3 years down the line. I'm sure Rishi also has that challenge. They will move to a bank because they will get a better rate, and then in that bargain the data also gets built for that particular customer.
Correct.
So that's how we become the incubators, I would say. I personally believe in these 3-4 years I've seen how the customers data which is being harnessed by us, and how the banks are basically using it to do a BT on them.
Correct. So we've got a new word for NBFC. Earlier it was only shadow banking. Now it is an incubator banking also. So
Just one. Sorry, go ahead.
I was saying that there has to be a big cultural shift. Till the time every vertical doesn't start thinking data, right, it will not happen. Because if the sales vertical is only thinking of data as a tick in the box that somebody asked them to fill in the application form, and that is the reason they are filling it, that change would not happen. So as much as data has to be built, or the models have to be built bottom up, the change on driving data across the organization has to happen top down. At least that is something that has worked for us.
no, that's true. I think we've got a couple of minutes maybe to the Q&A, or we have another
I
point.
just want to add. I think one aspect we haven't touched upon is we talk about. I think we mentioned that data is an asset, no doubt about it. It used to be liability, and it will continue to be liability. Only thing is, now that liability is contingent. You look at the regulations, GDPR Section 22, which specifically talks about if the process is completely auto decision based, customer has the right to back out. Similarly, the biasness into the how do we manage the biasness? Is there a right answer to it? Possibly no. Can we diversify our teams? Can we diversify the genders who create the models? Yes, possibly one of the way to look at it. Because sometimes the biases are so inherent into individual who is coding it or who's modeling it that the biases will creep in. The modern attacks on these models is not going to be the traditional way. Attacks will happen. They will manifest into different form. For example, we are seeing the instances of data poisoning while in the training model sets.
Oh.
So you don't need actually a very high reconsonance on your network and all that. All you need is somebody to train data on something which is biased, which plays in their favor, and therefore the decision making can be influenced. So it is extremely important that the AI explainability, it is no longer a black box. We understand that. The second part of the thing I think we haven't touched upon is there is so much of data which is generating within the organizations, right? So when we talk about data and how we can leverage it, we often refer to the customer data. But think about it, and so will say, and other cybersecurity professionals would relate to it, that their first demand is to at least get my systems log integrated with something called SIM. Now, look at the size of the SIM logs getting generated on a day-to-day basis. It could be anywhere between few terabytes to hundreds and tens of terabytes, depending on the size of your operation. Now the problem comes: what do you do with these terabytes, right? What do you do with these logs? Are you going to do analytics on top of it? Are you going to generate the meaningful logs? And most of the cybersecurity professionals would relate to it. They would say that the rule creation on the SIM is assumed to be their responsibility, while it is actually the business case. It is what the business wants to track should be the prioritize. So having sensitization across the organization on handling data, what data we are generating, cross-leveraging those data to say, are we in a position to actually use it as an asset, at the same time not build our contingent liability too big for us to handle in the future?
Yeah, absolutely. So we just have time to just sum up. We've had a great interaction, and I too believe that big data analytics cannot be used just because you need to use it. I think it's about the culture that we are promoting within the organization. What kind of objective that it really brings out is what we need to answer when we implement the big data analytics tool, or whatever you call it. In my opinion, we're just scratching the surface. We haven't really utilized the data that we should, whether it is insurance company, whether it is bank, or whether if it is NBFC or any other BFSI. We haven't used to the potential, or rather used it to the right cause. Second, since the entire technology and BFSI fraternity is here, I think there should be a great collaboration between the functional user and actually the technology provider. There is always a intelligence gap between these two. Probably as a user, I don't understand technology on what what is the potential and how potent it can be. I think that comes from the technology partners here, and I think if we bridge the gap, and that's how we achieve optimization. Uh, I thank all my panelists, and being honored to be part of Elets, and thank you Elets again for giving us an opportunity. Open for questions.
How to manage risk, two risk, use account risk and fraud related to KYC fraud risk.
What is the first one? What is the first risk?
Mule account.
Mule accounts. Anybody wants to take it?
So mule accounts are what, like, it's the identity takeover risks, right? So let's say I go to a village, tier 6 village. Poor guy may not understand that what is going on with him. He will say, okay, look, there is a government scheme going on. I'll pay you 500 rupees. You press your thumb impression, right? And I give my bank account number to this guy, mobile number to this particular guy. So now the identity of this guy has created an account or a wallet which I own, or I have a control of, right? So that's typically how the mule accounts, one of those typical scenarios of the mule account, right? The only way to look at it is if you can break the chain, the authentication, for example. I'm just trying to help with an example. So let's say if you authenticate using your Aadhaar and you make it mandatory that your bank should be seeded with the same mobile number as your Aadhaar, the link can break immediately. So it is thinking through your process to say that are there vulnerabilities that exist in your process, considering not your product, but considering who's going to consume this product. So if I make a journey and say two-factor authentication OTP, and if OTP is subject to your man in middle attack or auto read of messages that we blindly these days allow, which on a lighter side, possibly only the fintechs and the bad actors would read it rather than the consumer reading it. We all know the efficacy of SMSs with the users as a ways of communication. So it is the choice of an organization that you have adopted two-factor authentication. One of the factor is this: nobody stopped us from adopting biometric. Nobody stopped us from adopting, let's say, device binding as one of the particular thing, or SIM binding for that matter as one of the key control. So the control of the mule account rests on how you look at your process, how well you understand where this risk comes from in your business, in your process. The basic tenets of managing this risk is addressed through the trinity that we have talked about, right? So Aadhaar identification serves as a very strong control.
And I think
Sorry, the other one.
I think enhancing your deduplication process also helps. Using your AI. That's where your AI and Soundex and those kind of technology. Really
Just to
helps.
add, the rural India, there is a problem that is, mobile number is not linked to Aadhaar. या फिर गांव में जिसने अकाउंट आधार को खुलवाया है उसी का नंबर उसमें होगा, चाहे वो ऑपरेटर हो, सरपंच हो, मुखिया हो. टिपिकली दिस इज द ग्राउंड रियलिटी.
Sorry, one of the ways that we manage these risks, and because there is a part of business that we do in tier 3, tier 4 centers, is also triangulation. So it is not just about looking at the KYC document of the customer, which is either coming from DigiLocker or coming from e-Aadhaar and saying that this is the customer. It is also triangulating it against different sources. For example, triangulating the name that you get from KYC against the penny drop name that you're getting basis banking. Then again, triangulating that name against PAN. That becomes like a three-way triangulation to say that this is the customer. In customers where the customer has a smartphone, making sure that the last 4 digits of the bank account that the customer is using are the ones that are also present in his SMS data, that becomes the second triangulation. So one of the the third one that we've implemented is the dedupe thing, where if we see applications coming from the same mobile number or from a same device in a particular location, that also becomes like a flag for us. So at least triangulation in a way has helped us mitigate identity and fraud risk.
One more point to add to that would be, a practice that we have recently started, or something which was going on, and one new addition that has recently been done. So whenever these accounts are created, typically we try and create them linked to the Jan Dhan account. So in a Jan Dhan account, we have seen at least the numbers are similar to what has been given by the customer, because the money which is coming from the various subsidies that the Pradhan Mantri schemes are given. So then that comes in that place. Second, and the recent one that we have done is the account aggregator. So the moment this mobile number is entered, the relevant accounts also reflect over there. So, and those accounts will have the data of the customer authentication also over there. This has been recently started, only about couple of months.
I think you had the second question also, right? I mean, you had
KYC.
KYC fraud.
yeah.
So one part is that when we are talking about the data only, then when this mule account as well as KYC fraud, there is a human touch also. At that time, field investigation is a very important. That must be there. One part is that when we are using data analytics, yes, what Sonali has added, there should be a triangulation. There should be a triangulation, many verification using social media data. That can only help you. Otherwise, there is a mule account, always there will be. Because fraudsters is one step ahead of us. So that we have to track.
Thank you. Anybody else? Thank you so much.